Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we had the pleasure of interviewing Peter Spina of GoldSeek. How you doing today?
Doing great, Darrell. Great to see you, and thank you for having me on your show.
Yes, it was good meeting in the green room at the VRIC, the Vancouver Resource Investment Conference. I've been following you on X for a while. I always love the humorous tweets and such, and really just getting into the metals and the miners and everything. So I always appreciate your perspective. So, coming out of the VRIC, I mean, we're coming up on a month ago, a little over a month ago or whatnot. I'm just curious in your takeaways from like the attendance, the sentiment, all of that. What were some of the things that were kind of going through your head when you were at the conference?
Well, it was an excellent turnout this year. I've been going to that conference since the early 2000s or so. It's been about 25 years. Almost every single year I go to this conference. So from the perspective of the past conferences, there was a period, 2008, 9, 2010, 11, where it was quite a huge attendance and people were just extremely bullish. So I felt this year had a bit of a taste of that, but not to the degree that we saw at a market top. This is the first year that finally the retail investors in the West, I feel, have woke up to this, what I used to call the stealth bull market in gold and silver. And it can no longer be ignored because the prices have gone up so much. The rest of the world has, been bidding it up. And now the Western investor has taken notice finally. This year, that was a reflection that the Western investor retail has started to take notice. It's, I kind of joked in the past years, it felt like going to a funeral at the conferences because there was such a negativity. It was just something that you would see at a bottom of a market. And even as the price started to increase, the sentiment was quite negative. Like even last year it was getting better, but nothing like this year. This year really felt like people started to really get that there's a big move in these metal markets. It's not a short-term thing where we're just spiking and going to crash. And then they see, what's happened in the last year, politically, geopolitically, there's a lot of things happening. So it was a good reflection of that situation. And definitely a lot of, good interest and appetite to invest in the sector still. I think a lot of investors are now just, coming on board and they're wondering, is it too late or not? Have they missed a big move and so on? So it was, it was a really good conference. I really enjoyed it this year, and I wish it was another day or two because I didn't even get through maybe 10% of the conference hall. It was incredible. It was so busy.
Yeah, it was. I mean, there was some times where I could barely walk up the aisle, and get to where I was trying to go. And I had quite a few new investors, that watched the show, and they came up to me and said, "Hey, I'm new to the sector and such," and they wanted to engage on that level. So, that was good to see. So I'm curious in your perspective. So having been at these conferences a lot and having been through, a couple of bull markets, so would you say is this a correct characterization of what's happening? So like obviously 2008 to 2011, I mean, gold was in a longer bull market than that, but we did have the monetary system was on the brink of collapse, from in 2008. And then you had a huge run up in gold and silver from 2008 to 2011. Now, kind of thinking about, where we are now and what's happening now, Ray Dalio talks about a monetary order breakdown and like where it's shifting. You have central banks buying gold, loading the boat on gold. And you have these geopolitical tensions, you have these trade wars, capital wars, all these different things. It seems like it's more than just like a monetary order breakdown. And so just curious in your perspective on that.
Yeah, I mean, with the financial crisis we went through in 2008, that really was kind of the last kind of push in this bull market where gold ran up to almost $2,000 an ounce. It didn't have the same issues that we see today. It like you said, there's a myriad of problems taking place, and gold is returning back to its historical attribute as trusted source of money, a place to store your wealth, a place to protect yourself from the geopolitical fiat currency crisis and so on. And so it is a convergence of many things at once. And we didn't have that back in 2008, 2009, 10, 11. Things were a lot more cohesive compared to where they are today. And I would say that we had a chance in 2008 to start fixing the issues. Instead, they decided to add to the problem. Basically, they didn't fix the problem; they made it worse, much, much worse. And we've been living in this fantasy world for so long. But now things have converged financially. The finances of the not just the United States, but a lot of the Western world is just a lot of the world is just sinking in debt, unmanageable. We have the geopolitical problems left and right, which really accelerated and kicked off on a different level in 2022 with the war in Ukraine. And now we have Trump in office, which throws in another mix with the trade wars, the tariffs, isolationism versus this globalization trend we've been going through. So through all this, gold becomes the go-to historically where you seek shelter, your safe haven asset. But it's also replacing, like I think Ray Dalio was referring to, and you were just mentioning this new monetary order. The U.S. Treasury has been kind of the gold standard. It's always been if there's an issue, you run into Treasuries, and then somewhat gold. But it's always been in the West. You kind of use Treasury, so on and so on. But now with the rest of the world kind of trying to reject the U.S. dollar, the U.S. dollar is still the main fiat currency used in the world. But there's no really good alternatives. And you store your dollars, whether it's in treasury bonds or just cash. But that's shifted. And now the exit out of treasuries is leading into gold. There's no real good alternatives to move your cash into. And whether it's central banks, large, very wealthy investors, billionaires, you see it across around the world, and this is a bull market compared to, I would say, another feature of this. Again, I've kind of hinted at first that this bull market is a global one. It's not one that's being driven so much so in the West. This is China buying, emerging markets buying, not just BRICS nations, but Poland. I live in the Czech Republic. The Czechs are buying. The next door neighbor, the Poles are buying. Other emerging markets are buying gold, and these are allies of the U.S. So they don't see the same safety in holding so many dollars and treasuries and the risks of that. So there is a lot of issues at hand. It's coming together. Whether this is going to be the ultimate breakdown in the monetary reset or not, I'm not so quite sure we're at that point. This is just another, I think this takes us closer to that point. It could calm down in a couple of years from now, but I think we're resetting the value of fiat currencies, and you see that in the gold price.
Mm-hmm. Yeah, for sure. So just on that point, so with U.S. Treasuries, obviously countries and nations, central banks, they're looking for a neutral reserve asset. And when you look at the U.S. Treasuries, I mean, obviously the war in Ukraine, the weaponization of the dollar in that situation, and now you have the weaponization of tariffs, right? And it seems like these other nations are like looking for like, okay, we need to have an alternative outside of the U.S. dollar because the U.S. dollar is very politicized, right? And gold gives them that neutral status, right? And I'm also curious about positive real yields as well. So obviously Trump wants interest rates lower, interest rates being lowered, and I mean that means depending on which inflation numbers you look at, right? So if inflation's higher than the interest rate that you get on the treasuries, then, you're getting a negative real yield. And so typically gold performs well in those types of environments. But then also you look at the amount of debt creation, the amount of deficits and things of that nature where M2 money supply just continues to increase. And it's going to take a lot more of that when you add, 500 billion to the military budget, when you talk about onshoring manufacturing and all these different industries and such, like it's going to cost trillions of dollars. And so, I kind of wonder about the yield side of things where, the U.S. Treasuries were seen as like, okay, yeah, you could park your money there and get 3-4%. Now it's like, do you want to park your money there for 30 years?
Yeah. No, thank you. I mean, it may make sense in a short-term basis if you have cash and you need a, 3, 6 months, 12 months on the bills. Yes, it is unbelievable. I mean, you look back when Trump was elected in November before he took office, the gold price, I think it was like $2,700 and it dropped a few $100s an ounce because there was a real fear that he was going to come in, he's going to be fiscally responsible. Dodge was coming in and they were going to make really the government live within its means. I mean, that would be amazing. I would love to see that.
Hmm.
I was supportive of that, even though I didn't believe it fully. I knew it was a matter of time before this, how government works and so on. It's impossible. It's you don't have the right willpower and the support of the people to do it. So, boy, yeah. Instead of that, we're getting incredible deficits. Even in the trade side, a few days ago, the trade deficit was much higher than they expected, and this is with these higher tariff rates. And so things are broken, and eventually, this trend that we've been living. I grew up in the United States, and I love the country. I love the ideals that the country was built upon. But unfortunately, the system it's really messed up at the moment. Our economy is based off consumption. 2/3 or 70% of the economy is based off consuming goods made in China or Vietnam or all around the world. So we're just exporting debt and consuming, and it just doesn't work. And so I do get what Trump was trying to do, but he would have to have been a lot more aggressive to somehow try to fix this problem where we can rein in these deficits internally and externally, but both of them are not being reined in. He's trying to, rein in some of the trade stuff, and now with the Supreme Court overruling them, and even before they were overruled, I mean, the trade deficit numbers last week were just horrendous. So I don't know how, if there's a way to politically fix this. The will's not there. Obviously, they're fighting each other, and there's a lot of different powers and interests trying to prevent this. But they're not taking care of the deficits. They're not fixing things. Any attempts, it seems like a failure. So it's not a good situation. And now, like you said, all these spending programs and all this debt is coming up for refinancing too. So they want to try to artificially lower the rates. But is the market really going to want to lock in their money at 10 years at suppressed rates? Yeah, like you said, zero negative yields is it's very encouraging for the gold buying side, because gold is a zero yield. It's a zero yielding. I mean, you could actually lease it out and if you wanted to do that, but for the most part, yeah, you don't have a yield on gold.
Yeah.
So that is gonna encourage more, support of the gold price as they, bring in their, the Trump administration is changing the FOMC. Hopefully we get the, change in FOMC here. They want, and that'll bring down rates, and they'll just bring in more support for the gold market, put pressure on the dollar. But I think that's part of their policy. One of the ways to try to make manufacturing and things more encourage it is by having a weaker currency. So I don't think they're trying to do that, but I think their main focus is, hey, we've got incredible amount of debt, we can't maintain it. We're paying 1.1, 1.2, I don't know what is now, way over $1 trillion a year in interest payments. A lot of the debt's coming up due. The rates are too high. So let's manipulate it. But, anything and when you manipulate the free market, the system like that, you create imbalances, and eventually things tip over and start breaking. And we've had that already multiple times. It's going to happen again. And each time the problem is bigger and bigger and bigger. It's like, how do you solve it? How do you resolve it? So one of these times is just going to blow up in their face. Is it this time? Maybe. I mean, is this really it? Where this is just going to run out of control? It's possible. I mean, with the gold price running up, I have zero interest still at these levels to sell anything. I want to keep my physical. I want to make some profits off the equity side, and you can have some cash reserves and so on. But what am I going to sell my gold for? I don't want to hold fiat, because you could wake up. they could do an overnight revaluation at any point as well, and that might be their plan. They
Hmm.
to manage the debt. If you were to cheapen the dollar to such a degree, maybe you could manage the debt, but the consequence is going to be inflation. People are going to lose, their standard of livings will be confiscated. So it is a really difficult situation, and it's coming to a head, and all they can do is, like they say, kick the can down the road and try to keep this going for how many more years. But boy,
Yeah.
it's starting to get to the point where their next major crisis. We're not in a major financial crisis right now, but what happens when we enter into it? And there's a lot of triggers out there. And there's the rest of the world is too. Like you said, they're rejecting this U.S. Dominance, and they don't
Hmm.
like that. So there's I call it World War III, and it's not all just a physical war, but it's a monetary, it's an economic, financial, and so on. So, boy, a
Yeah.
lot of variables at play, and
Yeah. Yeah.
uncertainty and
Sure.
risks.
Circa 2020, we pivoted the entire company, turned on its head, brought in new management, George B., our CEO, who's built gold mines all over the planet, and we focused in on CK, copper cake. It was not reliant on drill holes and discoveries. We can go through this process, engineering, permitting, get towards a development stage asset. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
I mean, you highlight really, really important points. One is right now, I'm reading the book, The Triumph of Politics by David Stockman. And
Mhm.
I've been listening to a lot of Ludwig von Mises on the politicians wanting to serve their constituencies, right?
Yeah.
And how the politics of, no one has a political will to like cut spending or to cut someone's check or someone's entitlement and such, because that would be political suicide. And so we have that
Hmm.
dynamic. Then we have this interest expense dynamic where, when we talk about real positive, real yields, right, on U.S. Treasuries, the Fed wasn't able to raise, interest rates like Volcker did in the 80s. I mean, because our debt to GDP is significantly higher and such, and right, and so
Hmm.
and and it's like, okay, well, we kind of like we're stuck in that situation, because now if we raise the interest rates again, right, then we're accumulating more and more interest, and that puts the government in a bind. And so that's been tough. So Trump is like, hey, we're spending all this interest on the debt, and if we can at least cut rates and get that interest down, then we could spend elsewhere. So I mean, the goal is still to spend more, right? And then we have this issue of like 4-year cycles, political cycles. I mean, Trump has 3 more years. Then
Hmm.
who knows what this midterms is going to be like? Who knows, if we get a whole total pendulum swing back to the left in 4 years, right? At 3 years,
Yeah,
that's going to be problematic. So it's hard to like strategically plan as a nation when you have these quick changes. And so I'm curious.
absolutely.
I'm curious of your perspective on stable coins and that whole legislation. Apparently, they're trying to create demand for U.S. Treasuries, and this stable coin business is supposed to be, um, I guess, allow for that to happen. And so, I'm curious in your perspective on that.
Yeah, it seems like another scheme or scam to try to divert some money into treasuries. Like we saw with like Tether, they hold 100, I don't remember, 20, $30 billion worth of treasuries. So people who are buying Bitcoin to try to exit, or Ethereum or other crypto coins trying to exit the system. Well, those dollars get recirculated and are actually helping the system
Hmm.
by buying more, financing the debt. It's these are just different schemes to try to keep it going for a little bit longer. They may work if they would actually get their deficits under control. If they use this as an attempt to buy some time to fix a problem, but like you said, they just want to spend more and more and more. So they have no intention. Like you said, there's no political will. The Doug Casey, what do you say about democracy? It's a mob rule dressed up in a sports jacket. It's just people are going to keep voting out selfishly from the Treasury what they want. And the gold standard was supposed to prevent that. There's supposed to be it's supposed to be part of the checks and balances of the system to keep government, Congress physically honest. And when that
Hmm.
was, the link from to real money. Gold was severed, and finally in the 70s, and then things really got out of control. And like you said, back in like around in the 80s when Volcker raised rates, well, it was a totally different situation. We didn't really have a trade imbalance. We had a trade surplus a little bit at that time, I believe. So we didn't have the levels of debt to GDP and all that stuff. Now those tricks, the toolbox is getting limited. So they're trying out new tricks with the stablecoins and so on, but there's only a limited amount of things they'll be able to do. I think what's going to be more of a probably what they're going to have to do is try to control the yield on the long end. They'll have to start printing. The Fed will have to monetize debt, basically. And if that's how they want to keep the yields down, because the market is not doing it naturally. So if they want to do it unnaturally, they're going to have to essentially plan and do things to make that work. I think, these are just kicking things down the road until it doesn't work anymore. I don't know how much demand they talked about maybe trillions or something on that front, or hundreds of billions of dollars. I don't know how much might come in from these stable coins, but it's more hype and talk than anything at the moment. And I don't think it's not a big enough to deal with. I mean, if you got an extra $1 trillion or $2 trillion, does that really fix anything when you're creating $1 or $2 trillion in new additional debt every year on top of $1 trillion plus in interest payments? Like, the numbers just don't add up. So I don't know how they manage this. It just doesn't add up. It just doesn't add up.
Yeah, for sure. So, what about the concerns of a CBDC and the surveillance state? And obviously, folks think that this is the Trojan horse. And so, having money outside of the system, having a bearer asset like gold or silver outside of the system is critical. I mean, especially to that point. I'm curious in your perspective there. I think Dalio did speak on this in the Tucker Carlson interview he recently did about the surveillance of CBDCs and how the stable coins could influence that.
Yeah, it's horrible to be able to, the essence of freedom, the foundation of it is financial freedom. Ron Paul talked about that. Is you really have to protect that. And when the government or some entity has control over you, where they don't like whether it's your social credit score or whatever it is, they can just flip a switch and you're disconnected from the system. Like that's extremely dangerous. I'd much rather have cash. I'd much rather have fiat currency and cash than some sort of digital currency. That seems a lot more anonymous, but gold is the ultimate privacy, anonymous currency money there is out there. It's not being recorded in a public ledger. The idea that Bitcoin protects you is a total fallacy. It's very easy to track you when you're databasing your financial history and into a central database there, or other cryptocurrencies. Most of them are not protecting you there. Now, and if you're going to go on the government side, having them in charge of that, well, that's even way worse, because then they'll have additional tools to manipulate you. And it may just not be individual, might be on the whole, say, hey, this wallet's going to expire in 2-3 years, so you better go spend it. Or, it's much easier to institute rules and manipulate people. Say you can't spend this amount of money per day, and they do already do that in some levels. Like you can't take out this amount of money out of the ATM, or you can't spend more of this amount of physical cash. It's illegal. They're just trying to reduce our freedoms left and right, and they're treating everyone like a criminal. We're all guilty until we prove ourselves innocent, and that's horrible. That's a system. That's kind of, my parents, they escaped a communist system. That's how they treated the people. They treated everyone like they were guilty. They were spies. They needed to be controlled. And that just does horrible things to the society, to people, to humanity. It's destructive. So yeah. I see those all as threats. The CBDCs that's the next level of this electronic, kind of like a digital leash that everything they'll just have more and more control over you. So I absolutely despise it. I do believe there's a lot of good that technology can do, but there's also a lot of evil that technology can be used against people, and these individuals with it are don't have the best. Their goal is to control us, and we must resist that. We must stand up for our rights.
Yeah, yeah, agreed. Yeah, totally agree. And it's on both sides of the aisle. I mean, you got the commies and the fascists, right? And so it's they both want to control. They both want to control people and limit freedoms. So just curious in your projection on gold for 2026. I mean, obviously there's multiple targets out there. I think JP Morgan has it at 6,000. Some people feel that that's conservative or whatnot. I mean, some people don't even give price targets. They're just like, it's going higher. Just curious where you land on that.
It was much easier to give the initial price target a couple years ago that we're going to head to $3,000 to $5,000 an ounce gold. But that was under the assumption back in 2022 when I was making those kind of views. But now things have gotten, I think, a lot more serious. I think there's a pretty good case that the gold price is going to get up to $7,000, $8,000 over the next year or two. But I think it's quite amazing on how quickly it's happening, and it could happen still within this year. We've just had a little bit of a pullback and pause, but overall, the trend is you get a pullback and it gets right back up. It gets bought up right away. There's a lot of appetite for it. There's a lot of private money now coming into the gold market, and there's a lot of central bank buying ongoing, and there's a lot more issues taking place geopolitically. So there's nothing to stop all the fundamental drivers continue to remain in place, grow. So there's nothing that indicates that this is over yet. I think it's going to accelerate and it'll get into a bit of a mania stage, and it could happen a little faster than I would like to see. I wish, boy, it'd be so much nicer to see every day a steady rise of $5, $10, $20 an ounce. This volatility, this is not good. It's indication of instability of the system, not the gold market. It's the instability of the fiat system, the trust in the system, and so on. So back to the point, I guess, yeah, there's a lot of $6,000 to $7,000 an ounce price targets by the banks. That makes me always a little wary, like, oh, okay, maybe finally gold is going to kind of peak out here and they're going to be wrong again, because they were wrong on the way up. They were so far behind the curve. But I think they're actually going to be probably on the lower end of the targets, because the way things are transpiring, I think gold has still got another few thousand plus on the upside left before this starts to kind of calm down. But that's not a guarantee either. And we got to keep monitoring and see how things come together politically. Maybe there's a calm coming. It feels very chaotic right now, and maybe things do somewhat calm down, and that would be helpful. And peace agreements are made, and fiscal discipline happens, and a lot of things that sound like fantasy right now probably are, but there is a good chance that we're going to see this explode very quickly again. And it's you see it right now. The gold price, it just keeps pushing higher and higher and higher. It's unstoppable. And you hear about shortages now in China, last over the weekend and while they've been closed. And again, it's a global bull market. It's not just being fed by one source. So it's a lot of trillions of dollars still out there floating around, not knowing what to do, where to hide. So, you got to watch out for the downside. There's always going to be downside risks, but I still think there's a lot more upside than downside risks right now.
Yeah, for sure. So, I'm curious in your perspective on this. So for me personally, I'm still buying at these levels. Like, I think gold in the next 5 to 10 years could be double or even more of where it is now. Just knowing that, nothing's going to stop this train. This is just going to keep going. And then also, just even though I've been buying gold since $2,000 an ounce, $1,600 an ounce, and it's a little tougher to bite the bullet to buy at these levels, right? And I mean, obviously measured in dollars. But for me, I'm a father, I have kids, and at some point hopefully have grandkids and such. And it's like, it feels like I don't own enough. And so I just need to continuously trade fiat for gold. And so as part of trading, fake money for real money. And so I'm curious, are you still buying at these levels?
Yeah, I take my fiat coupons, and I'm not buying as much physical as I am buying the equities right now. I bought my last actually silver under $80 an ounce on the way up. I haven't bought any physical gold recently. Yeah, the equities have more leverage to it. I've been, accumulating gold and silver for a few decades, and I still don't feel like it's sufficient. I feel like, oh, I should have been more aggressive, and every single time, 3,000. Oh boy, 3,000 is starting to feel pretty expensive, but oh, here we are, 4,000. Well, 3,000 look like a deal. It's all, based on the perspective where you are. And I think long term, yeah, you're not going to do horribly. You're taking more risk as the price goes up. But if indeed this does reset in the near term, the system, and gold flies to $20,000 an ounce, and they try to reset the values, try to erase the debt through a monetary reset or something like that. Yeah, that's where you're going to hide. You need something to hide into, and those who don't have any protection, boy, they would have loved to buy gold at $6,000-7,000 an ounce if they're going to revalue the dollar much higher gold against a much higher gold price. I had planned to leverage the gold and silver stocks against the gold price on the way up. I thought at this point I'd be taking a lot larger profits off of the mining equities and then buying physical, securing in physical. But unfortunately, the equities have been lagging just big time, and there's a lot of value out there. So I've actually flipped that, and I'm not buying physical right here. The equities are way more interesting.
Mm-hmm. Are you mostly looking down the chain, like exploration, developers, producers, royalties? Where are you mostly parking capital?
Well, I've traditionally looked and invested in this in the junior side. I've loved the exploration, small junior producers, and so on. I have about maybe 10%, 15% of the portfolio in larger caps and larger miners, larger names like Equinox Gold. I didn't think I would be still holding that right now. I thought I'd be fully in the juniors and stuff by now. But they are so far behind, and traditionally, like they say, the miners go up first, the big ones, and then the next group kind of goes up, and then the smaller caps and so on. So, they, like Equinox, had incredible earnings last week. A lot of the miners did. They're printing, they're mining money, basically printing profits here at huge margins. The street doesn't recognize it. So I like the miners here because it's a very low risk, and a lot of them can double, triple, or quadruple here, and they've got a lot of catch up work to do. And I think that's happening right now, especially after this quarter's earnings. Again, it's harder to ignore the amount of money being made. Wall Street can't even ignore it, even though, as much as they may hate our sector at times. Boy, those profits are huge, and nothing's growing like our sector is right now. So I think there's going to be a lot of institutional money continuing to come in there, and as some of these larger cap names go up, I may secure that in the physical, or I may buy more juniors and so on. But I'm 100% basically in this market, so I have huge positions in really earlier stage to more advanced exploration, juniors, and so on. But yeah, I do hold some of the larger producers still. I'm surprised. I thought at this point, again, I would be elsewhere, but the market still hasn't properly valued them.
Mm-hmm. Gotcha. What do you think about the developers? So, like, when you look at the Lassonde curve, when the exploration companies, they increase significantly, they get to a certain point in their process, and then they get bought out or whatnot, and then you get the development stage where they're developing the mine. And the price typically flattens for a while, and then it goes up as they get into production and such. And so I'm curious in your perspective on the developers.
Well, one of the companies that one of my largest positions, I met them actually at VRIC 8 years ago, 9 years, I don't know, several years ago plus, Abra Silver. They, like today, again, new fresh record high. I mean, it is just marching higher and higher and higher. And this has already developed to the size where the project is now more de-risking and preparing itself to turn itself into a mine. But this is a pack leader. And I think the problem is the curve, that doesn't work as well right now because there has been such a lack of development, exploration for so long. The sector's been depressed. And any company that's been able to develop and advance anything at this point, I think, is just going to get a premium. Majors are going to start coming in and buying them out. So I don't know if that curve works as well right now in this kind of a bull market. I
Hmm.
think like with Auburn, I haven't sold a share. I've been holding this thing for almost a decade. It feels like, and it just hits record high records. Like this thing's. I thought I'd be selling at these levels, but with the metal prices where they're at, and they continue to add value, it's just like this thing still looks cheap to me.
Hmm.
So traditionally that curve would kind of put this company more into starting to level off and wait for the mine to, whatever to develop. I don't know. It's not happening. So I like the companies that have more developed resources right now that are advancing it. Anything that really is they're really, especially in the silver side. Boy, and even in the gold side, there was no major gold discoveries in the last 2 years. Any major gold deposits, it's just really lacking. So any company with significant resources out there is interesting to me. I think those will continue to lead the pack until a later point, and then you'll get huge moves into really tiny juniors with higher risks and so on, smaller resources.
Yeah, yeah, for sure. Thinking of like silver miners, developers, I mean, we obviously had the situation with Vizsla in Mexico, and then now I think the Mexican government killed one of the head of a cartel down there and such, and there's been just mayhem like in one of the biggest like tourist spots in Mexico. And so,
Hmm.
some people have been reassessing the risk in Mexico. And Mexico is like one of the hugest like silver producers and has a huge amount of silver reserves. And so, just curious in your exposure to Mexico.
I've traveled to Mexico many times, maybe 20, 30 plus times. I've visited a dozen companies there. I invested in First Majestic, Endeavor Silver, all these companies back in the early 2000s. It was quite amazing. And there were security risks along the way. There was periods where certain areas were a little more risky. You had to be careful. So I've always assumed that these risks exist. But what's happening right now creates a scenario where it could be problematic for the next, I don't know, several months, year. I don't know how long this. Well, we know from what Trump said back in early January that the U.S. is going to start land-based operations against the Mexican drug cartels. So this wasn't anything new. But now seeing it actually take place and the reaction and the violence, it is unsettling. And I think there's definitely risks that it spills over into the sector. Certain areas are more dangerous than others, so you have to be careful. And I've traveled down there where I was going down to a gold mine, and at a roundabout, the GPS, it's old 15 years ago, took us to the wrong exit, and then 20, 30 minutes later, we were pulled over by the police saying, "What the heck are you doing here? Are you working for the drug cartel?" Because only drug cartel people live in this area. It's like, no, we're going to this gold mine. Like, well, you get out of here soon because the sun sets and you guys are going to be dead, basically. It's like, so it was known as like these certain areas you do not go to ever, even when things were stable. But they've typically kept separate. The violence hasn't spilled over for the most part. It's been, they keep focus on their stuff, their business, and so on. And I've always worried that there might be situations here and there that might take place. Boy, I'm a little more concerned now if they're going to be very aggressive in trying to wipe out these drug cartels, that they may take their retaliation out on some of these foreign companies that are there.
Hmm.
But it may be more of overblown fear than what will actually happen. We'll see. But I think I have. I don't know, percentage wise, maybe 20%, 15, 20% of my portfolio, maybe 15% in Mexico. I felt that about a year plus ago, when the new administration came in, it was quite a positive step. They started to move things along in the mining sector there, where things were very difficult for a while. They gave Silver Tiger their permit there. They started moving other things forward. So there's a lot of positives, and then this is happening. So it's like, I think for next period, it's a bit problematic, and it could cause issues, and they may lag. Those companies are gonna, it's not gonna be, it's not a positive, and it's a dangerous situation, and it may halt or limit certain activities until this gets resolved. So it's something I'm watching really carefully. It is I'm not going to be dumping all of them. I may reduce a little bit. I've been mostly focused in the U.S. over the last year plus, but I've always loved the potential of Mexico. I started getting more involved a year plus ago because of the new administration and things improving. But this definitely makes you want to think twice which areas you do invest in, because there's certain parts. Yes, they're in the cartel or next to the cartels and their neighborhoods. So those are more risky. The other ones that are maybe there's certain parts that are more removed, but it is a volatile country in certain ways, and it's unfortunate because it has such wealth, and it's the largest, like you said, largest silver producer. So what does happen if they close down some operations for some time in a tight silver market? I think the second largest silver producing country is only has about half the production level of Mexico. I have to look it up, but it's huge. Mexico is a huge contributor, and U.S.'s main import source of silver is from Mexico. So it creates another strain. It could impact the silver price in a different way. But for the silver stocks that have large exposure there, yeah, I wouldn't be 100% exposed as an investor to Mexico right now.
Yeah, I can see. I mean, we're already, 5 years into deficits, and if this spills over to an eye for an eye, in a dog eat dog world, and spills over into our sector, like, I mean, that could shoot silver prices higher, but some of those related equities in those areas downward, and so I could definitely see that. I'm curious in your perspective on the paper market activity. Obviously there's these weird times at night where the price of gold and silver measured in dollars just falls off a cliff randomly, and such during illiquid hours. And so curious in your perspective there, are the paper markets in trouble or what? I see that margins are being increased and things of that nature. And I'm just like, okay, what the heck's going on here? Like, I know that they're influencing the prices, but just curious if there's anything structural there or any risks there or what.
Yeah, I've never trusted the paper markets. I always called it more of a casino, which benefited the key players who had dominance over the small speculators. I've watched the COT reports for almost 25 plus years, and it's a very similar pattern in the past where gold price rallies, the banks short it, the speculators go long, and the price pulls back, it's smashed, they smash it, speculators sell out, the banks cover their shorts, and there's been a lot of these games, and we've never had full direct proof that they're manipulating it to the degree that some of us suspect it to be, but they've definitely gotten in trouble for spoofing in other games in the precious metals market. So the paper markets are a bit of a paper game, and it doesn't really truly reflect the metal prices. Obviously, the silver price should never have been this low for so long. Why did that happen? Is it because of the paper futures market, keeping it depressed like that? I think so. Now, because of, I believe the price was suppressed to such a level for so long, the opposite is happening. We have a physical market where paper can no longer control. You can't just print physical. So the paper games were, COMEX were 99% plus of the paper. It never settles in physical form. It's just, settled in dollars. It's a paper casino. It's not a true market. Now with huge deliveries taking place, whether it's the United States, London, Shanghai, that's a physical market now, and that's dictating the price. And now we're seeing the true price for physical in a tight market, which has been developing for many years. It's no surprise that silver is moving into a real tight shortage situation. It's been moving towards this point for many, many years, and instead of the price moving to $50, $100 an ounce to encourage new production, exploration work, and so on, no, it didn't happen. And now we're really tight. We have a market which they're just competing for. People around the world are competing for existing supply. So it's a very interesting point. I think silver price is going to go into a mania mode. I think people thought that was the case months ago, that this was it, and then it popped and we had our correction, and that was the end of it. No, 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 no. That's still coming. That was a preview. I think that was just an appetizer. It's going to get a lot more wild.
We're gonna have a main course dish come out at some point. I think I was kind of concerned and too. I mean, me being in silver since $20 an ounce and such, and seeing it go up to $120, and then taking a huge haircut, which, I mean, there's many people in this space that say like, hey, prepare for a 30-40% corrections along the way.
Mhm.
I think it was in 2008, silver went from what, $27 to about $9 an ounce or
Yeah, yeah.
something of that nature, which was like I think it was what, a 60% decline, and then it went on to make new highs. And so it's definitely a roller coaster. So, you have to definitely keep that in mind and
Oh
have
yeah.
emotions in check, you know.
Yes, very much so. And don't be afraid, if this does transpire where this price does get overextended, it's going to if it can be depressed and under the true market equilibrium price for so long, it can also go much higher, way over that, especially in a tight market. And there's nothing wrong with securing some profits, whether that's, if the ratio of gold to silver is at 20 to 1 or something, going back and more into gold, if you don't want to get out of the precious metals, or for me, it's looking for some other assets to get into. And I think at a certain price, yeah, I'll be enticed. I did, because we have another kid coming along the way. I did sell off just under 5% of my position above $100 an ounce, just to play a little safe. And we need more space. We need another car, a bigger car,
Hmm.
more
Yeah,
house,
yeah.
and so on. So I was like, okay, this is a nice gift. I would love to keep holding on to it. I've been accumulating since I was in college when it was $4 an ounce, and I was buying it on the way up, and I was like, okay, well, I'm gonna, all right, I'm not 100% fully in the market now. I take a little bit of cash out, and with kids, you think a little differently, and obviously on your risk profile. But yeah, like you said, keep your emotions in check and have some targets. Like, there's no way you're going to time at the top of the market. It's much easier to buy than it is to sell. It's the emotions we have it's horrible. It's just the ego gets involved in such a way, just like, oh, I have to hit that top. I can't sell too soon, blah, blah, blah. And of course, because everyone around you is buying it because the price is going up, is everyone's interested. And it's like, oh, well, I want to be part of this. I don't want to
Yeah.
sell too soon and miss out. So yeah, I'm a contrarian all the way. Like gold and silver have always been a contrarian investment and trade and so on. But even within that sector, when things get into a mania point, I don't like big crowds, so I always use that as a time to do it. And I think there's no way to time it so you scale out. You always just slowly take money out, and it hurts less that way.
Yeah, for sure. And I mean, you mentioned earlier, like finding, where you're going to park that capital. Like, what's your strategy? What are you trying to accomplish? What are your goals? Things of that nature. And you mentioned like, having another kid on the way and such. I mean, those are different goals. Whether you need to get another house or bigger vehicle, whatever the case may be, right?
Mhm.
When you have those types of gains, being able to use that to either buy another undervalued asset or whatever the goals may be, like it's important to consider that.
It's always all relative, all the values in the market, all the assets, and it's so important to measure each other, against each other. It's a little more difficult if you have a currency reset and so on, but you have or a special situation now where silver, it's industrial and monetary, and you have both of them converging at once to really super spike the price. It's hard to always to understand, what the price truly should be at. But oh yeah, your risk profile is, and you always assess it, and yeah, we're all different stages in life, so everyone has different needs and things in time where they need to be more secure. But like you said earlier, it's like you think about your kids, and then maybe being a grandfather at one point, having grandchildren, and wanting to pass something down onto them. And it's like, wow, well, I look at gold and silver as those assets that I can hand down to them and know that they'll always have some precious value to it.
Yeah, agreed. Well, Peter, if people go to GoldSeek, what can they find?
So we turned 30 years old back in August of last year. The site has been helping gold investors and silverseek.com silver investors find various opinions on the market. Actually, I started the site because CNBC back in the day they hated on gold. They used to laugh at gold when it was $300 an ounce. Jim Cramer said gold would never go above $360 an ounce. So, so I was like, what are you talking about? That's not how we see it. And so I started this site as an alternative to create a platform for other opinions on it. So you can go on there and get different, viewpoints on the gold and silver markets. I contribute to the site with my own views at times. Mostly, I just now do some video updates and contribute most of my views on Twitter or on X at GoldSeek. But try to keep most of my focus right now outside the family. I'm focused mostly investing in the company side and trying to figure out this bull market as we all are right now and see where it goes.
Yeah, for sure. And then you're also in our commodity university. You're one of our instructors. Give the audience a little bit into insight into like what do you talk about or what are you teaching on in the commodity university?
So the last one I did was about being your own central bank, which I thought was an interesting topic to talk about because in today's world, you have to recognize that our governments, the system is corrupted. It's bankrupt. The governments are bankrupt. They're not going to protect you. You have to take your own action to protect yourself. You have to be responsible. Self-responsibility is a huge thing, which I don't think growing up in America more and more is and the younger generations were taught to rely and give me this handout and so on, and the government's going to protect and take care of you. That's unfortunately, if you look at the numbers, that's not a right approach. I believe you have to be really careful and protect not just yourself, but plan for difficult times, whether it's a financial crisis, helping out your family and friends. And I look at like my dad, my parents' generation. They had pensions from their jobs. We get Social Security, which who knows how much of that is going to be there for us when we retire. So it's like you have to save. You have to take care of your future yourself because the governments, you can't really rely on them right now. You really have to do things and take action now because time is ticking. So that's what I try to focus on and really use gold as an example of being your own central bank, creating your own ways of savings and protecting yourself from the system, from a turbulent system.
Yeah, for sure. Yeah, definitely. A system of turbulence, corruption, and overspending, and lack of discipline, and so on and so forth. We got so many different issues with government. Appreciate you for coming on the show, Peter. You all have the information. Be sure to go check out goldseek.com. Also, you can follow him on X at GoldSeek. And until next time, Peter. Appreciate you coming on the show.
Hey, thank you, Darrell. Appreciate it, and it was great talking with you. Thank you.
All right, likewise.